The stock market is slowly starting to show signs of recovery from the stock market crash that happened earlier this year. At least it looks like things are slowly starting to go in a positive route, at least for now. But keep in mind, a stock market crash or a dipping market could potentially just be around the corner. And at this time of speaking, a lot of stocks are still trading at crazy valuations. In this video, I'm going to be talking about one Canadian REIT that is almost too good to pass up right now. The specific stock that I'm talking about today is Brookfield Properties. For starters, Brookfield Properties is a Canadian REIT that has a dividend yield of around 10% at the time of recording this video. And the markets have not been kind to Brookfield. In fact, this stock is so low right now that I think going into the future, it could easily double or triple in value over time. Now, like most REITs in the market today, this obviously does come at some kind of a risk. And I'll go into more specifically later on in this video while it is still a little bit risky to invest in not only Canadian REITs, but Brookfield Properties as well. But for now, if you're willing to take on a little bit of risk, Brookfield's Properties looks like a nice solid Canadian REIT that could give you some nice solid gains going into the future if you're willing to take on just a little bit of risk. And although the stock markets are kind of dipping down right now and there is a potential for a crash going on in the future, the nice thing about Canadian REITs right now is that even though it might take a long time for them to recover, at least we have nice solid dividends to kind of keep us happy for the time being. And these nice dividend yields that stocks like Brookfield Properties has will allow you to earn some income while you wait for Canadian real estate to recover in the long run. With a REIT like Brookfield that has been run very well in the past, I think overall presents a great opportunity for anybody that is interested in buying Canadian real estate right now. So let's talk a little bit more in detail about Brookfield Partners. So for starters, BPP owns some of the best real estate in the entire world. BPP owns real estate in Toronto, New York City, London, and even Berlin. These are very high quality assets. They're exposed to very large density areas, which basically means that they're in nice big places that have a lot of people that are willing to pay rent for them. Now, although the pandemic has definitely slowed down the value and the growth of these properties, I do believe that over time they will retain their value and even grow into the future. And the biggest influence of when REITs will actually recover will really depend on the market overall. And just like most REITs, BPP makes most of its income through its tenants paying their rent. And the nice thing about BPP is their dividend, although is really solid, they have a nice history of raising their dividend every single year since 2013 when they first went public. So when it comes to dividend investing, one of the best things that is nice to see is a company that is slowly increasing their dividends regularly over time. This makes BPP a nice solid dividend growth-based investing stock to invest into. Now, one thing to keep in mind when it comes to picking dividend-based stocks is that although Brookfield did increase their dividend at the start of the year before the pandemic, people might be questioning whether or not they're actually going to keep that increase going into the end of 2020. And it does look like Brookfield will keep their increase going towards the end of the year, and they actually have said in paper that they are going to keep that increase as best as they can. And after looking at some of their financials, it looks like they have enough cash flow, and BPP is going to be able to weather the storm, I think, for the most part. And this is good news for all of us dividend growth investors. Now, the not so great news is that Brookfield's stock price right now is not looking so hot. Shares are currently trading at about 50% of what they were worth pre-pandemic, at the time of recording this video, but keep in mind that since the stock has dropped quite a bit, going into the future, by the time you guys actually see this video, those shares might have dropped even further. But of course, when shares drop in a company, this also presents a nice buying opportunity where you can get these shares for this company at a very cheap price. And of course, I do believe that there is a lot of risk in buying not only BPP, but buying REIT in general. Nobody really knows what's going to happen with the real estate market going into the future, and nobody really knows when it's going to recover. I am a firm believer that when the real estate industry does recover, stocks and REITs will surge up in price, but the big question is, at the end of the day, which REITs are still going to be around. Now, when it comes to Brookfield, 40% of their assets are deemed to be office space, and the other 40% is deemed to be retail. Now, office space is a little bit better than retail at the moment because things are starting to open up slowly, and retail has taken a massive hit during the pandemic. And this is where I think Brookfield is probably facing their biggest problem, but if the market's recovery and things keep opening up, things will eventually kind of start to get back to where they were. And the other issue that Brookfield is facing is that a lot of people are questioning and I've talked about this already, whether or not their dividend will be sustained going towards the end of 2020. Now, I do believe that they will remain a good solid dividend stock, but that doesn't mean that there isn't a possibility that they might get rid of their dividend going into the future. Companies can always cut dividends, and it can happen at any time. So the best we can do is pick solid stocks that we think are going to grow over time and have a history of not cutting their dividend. This is the best that we can do to predict which stocks are going to either cut their dividend or keep their dividend like they promise. And I think when it comes to BPP, it's all going to be about retail. If retail can get back to where it was before the pandemic, then I think PPV will do a good job at sustaining its income, its cash flows, and it'll be able to sustain its dividend and grow in value. The biggest factor that I think is going to determine this REIT's success and all other REITs right now is whether or not the second wave hits, and if the wave does hit, how hard is it going to hit us? If a second wave comes through and hits the country and shuts a bunch of things down, then everything is going to go drop back down. We might even see a stock market crash that is even worse than the one that we experienced earlier this year. So there's a lot of things to talk about here. And overall, I think Brookfield is a solid REIT to invest into right now. And I think going into the future, they should be able to sustain their dividend, and they should be able to see some growth as long as the markets don't get hit too hard. But overall, I think at some point in time they will recover and Brookfield will be able to sustain themselves. So at the end of the day, the question you got to ask yourself is, should you buy Brookfield? Once again, I think Brookfield is one of those high risk, high reward REITs right now. With a dividend yield of around 10% and a stock price that is almost priced 50% of what it was pre-pandemic, it's really hard to not want to buy Brookfield right now. And looking at Brookfield's cash flow and lines of credits and their assets, I think that they will weather the storm coming into the future, especially if the second wave that comes and hits us isn't too bad. In the short term, I think Brookfield will do a good job of growing in value and getting all their assets back. But honestly, in the end, if the second wave hits us really hard, nobody really knows what's going to happen. So if conditions continue as they are and things keep rising, I think BP will be able to keep their dividend. And I think over time, their stock value should theoretically rise. And if you don't mind playing the waiting game and stomaching a little bit of a loss, I think Brookfield might be a solid REIT to invest to right now. In fact, at the time of recording this video, depending on when I publish it, I'm actually going to be buying a couple shares of Brookfield this week, and it's going to be one of my main REITs that I'm going to be investing into. I'm not going to go crazy and put all my money into Brookfield because I do think, just like most Canadian REITs or all REITs out there right now, there is a lot of risk, but I will definitely be buying a couple shares of this REIT that is super undervalued at this current moment. So I'm going to take advantage of this REIT being lowly priced, but I'm not going to go crazy. I'm going to try and do this in a very smart way. So I hope you guys enjoyed this video. Please let me know what you guys think of Brookfield in the comments section of this video. If you guys want to see more Canadian-based dividend investing videos and dividend investing stock picks, be sure to subscribe to the channel. If you guys enjoyed this video, please do me a big favor and give it a big thumbs up. So thanks for joining me today, guys. Let me know what you guys think of the video in the comments. I'll see you guys later, and take care.